Good evening, team. How are you doing? I trust you all doing very, very well. I trust you all had a great day. Okay, so today, it's another episode on demand and supply. Remember, on our previous YouTube video, we are talking about what about the demand zone. So today, I just said, okay, let me talk about what. Let me talk about the supply zones. Now, how do you go about drawing these supply zones and what do they actually mean, right? Remember I said demand and supply, right? You want to find what you want to find where there's aggressive selling and where there's aggressive buying. So I say on the demand zone, this is where there was a previous aggressive buy, right? There was a previous impulsive move in the market. The market it rallied with higher momentum. So we draw our zone from the previous base before the aggressive pump, right? Now when we come back to the supply zones, right? Mostly you find a supply zone where in an uptrend indicating the beginning of a downtrend, or also you find where in the downtrend showing us continuation of a downtrend. Okay, so now I want us to draw these zones. And remember, I said to you, these zones they act as as reversal, but also they can act as continuation. So it is very, very important for you as a trader that before you go about taking any trades, before you do anything, you wait for confirmation that okay, I've seen maybe a head and shoulders or it will depend on your trading strategy or your reversal patterns that you prefer before you take an entry. But some of the traders they just use limit orders and take their buy entries, of which I'm not against that. It is your trading strategy. If it works for you, who am I to criticize it? Okay, so now let us talk about these supply zones, right? So in the supply zones, right, we're looking for aggressive selling, right? We know that the market it moves up and down, right? But we're looking for these significant points whereby there was an aggressive drop in price. So once you see that aggressive drop in price, we want to draw our zone on the previous base of this market, right? We want to draw our zone on the previous base of this market because we believe that the market is likely to come back to this level before shooting down again, right? So that is what we are looking for. Okay, let us draw a supply zone. Okay, you can find that maybe it's something like this, right? The market was moving up, right? It was just a good uptrend. The market is moving up, right? It's a good trend. Then we had a consolidation at the top, right? We have a consolidation, something like this. Then after that, boom, a strong drop in price, right? A strong drop in price. So once you open your market, right, you open your chart and you see that okay, the market has already gone this far, right? You want to see that you see that okay, there was an aggressive drop in price, that an aggressive drop in price. It is not usual. I see it is very, very aggressive, an aggressive drop in price. So what you do, we go for the base, right? You go to the base before the market move, before the impulsive move, before the strong drop in price. You just go to the previous base, right? And you want to take all this base as your to your zone, right? And it depends on you. Some they take the first candlesticks, some they take it just depends on you on how you draw it, right? So you draw it, it can be something like this, right? It can be something like this. So instead of you chasing the market, that hey, the market is trending down, I want to short. No, you just okay, the market it dropped down. You just say okay, I'm waiting for for this coin to actually come back to my zone, right? So you're waiting for this market to actually come back to your zone. Then when it comes back to your zone, right? Now this is where now you want to be crucial, right? This is where you want to look forward for this reversal pattern. Is the market reversing from this level, right? Is the market reversing from this level? You can even go to as far as looking forward for the lower time frames, right? Do I see the reversal pattern? Do I see a double top? Do I see head and shoulders? Do I see a bearish engulfing pattern? So once you see that, you can see that okay, the market is likely to retrace from this level, but it's like to start shooting down again from this level. So once you see your reversal pattern, that's where you want to take your short entry, meaning you are expecting this coin to continue going down, right? So that's what you are looking for, right? That's what we are looking for. You're expecting the market to continue going down, right? So this is what you are expecting, right? So your first entry is where you see once you see a reversal pattern or on your zone, that would be your first entry point, right? That would be your first entry point. But other traders, right? They prefer that, okay, I'm expecting this coin to actually break my previous swing low right here. They say, okay, I'm waiting for this coin to break my swing low right here. So when it breaks my swing low, right? Okay, let me extend this a little bit. So when it breaks my swing low, right? When it breaks my swing low like this, I want this market to come back to this previous support, to come back to this previous support, right? Then once it comes back there, right? Okay, let me make it black. Make it smaller, right? See, once the market comes back there, that's where you want to take your short entry again, meaning you're expecting the market to retrace from this level. And again, guys, you don't just take a short entry. You want to see the reversal patterns that that will depend on on your price action, on your preferences. That, okay, as for me, I prefer this kind of a pattern before I take my entry. So that will be up to you, right? You wait for these reversal patterns before you take your short entry. So once you see those reversal patterns, what do you actually mean? You mean that I'm expecting this coin or this market to continue shooting down. But I'm expecting this coin to continue shooting down. Right. So you're expecting for this coin to continue shooting down. So this is the first way of drawing your supply zone, right? Drawing your supply zone as a reversal, right? As a reversal, right? You can see that, okay, the market it went down short term, then it was impact to your supply zone. Then after that, it retraces from a supply zone. So you take your short entry. So in this case, it is a reversal. Okay, it is a reversal. All right. Okay, thank you so much. Now I think you've understood this part. So this one, they call it a rally base drop, right? You can see the market was shooting up, then we had the base, then it's then it's a drop, meaning after you see that aggressive drop in price, you want to take your you want to draw your zone, then expect this coin to come back to your zone area. Then you want to take your short entries if you see reversal patterns. That's only if you see reversal patterns. Okay, right? So let's go to the other form of drawing in these zones, right? To the another form of drawing in these zones, right? Now we want to draw a drop based drop, right? Remember, I said to you, the market, it does move, it goes up and down, right? The market goes up and down, but we are looking for this the unexpected aggressive drop in price, that the market starts shooting down in a very, very aggressive way. So you have something like this, just a normal drop, then after that you have something like a base, right? Okay, let me cancel this. Let's start it afresh. Right, the market, we know that the market, it always goes up and down, right? But now we're looking for this unexpected aggressive drop in price, right? This unexpected aggressive drop in price. Maybe you have something like a consolidation around this area, right? Something like a consolidation around this area. Then after that, boom, a strong drop in price. A strong drop in price. So So once, as soon as you see that, you don't want to chase the market. You just say, okay, the market is already what? It's already moved down, right? So as for me, I don't want to chase the market, right? I don't want to chase the market. You just come back to the what? To the consolidation, right? Where there was what? A short-term consolidation. You just want to draw your what? Your zone, and you extend it to the right, right? You extend it to your what? To your right, right? So what do you mean by this? You mean that, okay, as for me, I'm waiting for what? For this market to what? To come back to my what? To my zone area, right? You want the market to what? To come back to my zone area. So the market must come back to my zone area. That's what you are waiting for. That, okay, firstly, I want the market to come back to my zone area, right? Then number two, I want to see what? I want to see reversal patterns around my what? Around my zone area, right? Yeah, I'm looking for the reversal patterns around my zone area. Okay, so as soon as I see my what, those reversal patterns, I take my what? I take my short entry, right? I take my short entry, meaning what? I'm taking a what? A sell signal that this coin will continue what? Going down, right? This coin might continue what? Going down. Okay, right. So this is what you mean. And also here, same thing applies, right? There are also traders who want to take their what? Their buy signals, their short signals, as soon as it breaks the what? The previous swing low, right? That's why they want to take their what? Their short entries. That, okay, I've seen a what? An impulsive move, right? A strong drop in price. I'm waiting for a what? For a retest, or whatever you can call it. So they wait for what? For the what? To pull back to what? To the previous what? To the previous supply. To the previous what? To the previous support. And now it will act as what? It will act as a what? As a resistance. It will act as what? As a resistance, right? Okay, they wait for the market to come back to a what? To the previous support, which is now a resistance. Then they want to see what? They want to see reversal patterns. As soon as they see reversal patterns, they want to take their what? They want to take their short signals around this area, right? They want to take their what? Their short signals, meaning what? They predict that the market from this level, it should start what? Shooting down again, meaning what? They are waiting for a what? For a continuation pattern that is going through what? It should continue what? It should continue shooting down, shooting down, shooting down. So it will be something like this. Okay, right. So now I've shown you the way of using supply zones, by what? By them respecting your what? Your zones, right? Using a supply zone as a what? As a reversal, meaning what? It comes back to your zone and it respects your zone, and it's at what? It's at what? Shooting down again. So I've shown you that. Then on our next YouTube video, I'll show you how to use them now as continuation patterns, right? How to use them as continuation patterns. I'll show you on our next what? On our next YouTube video. But to motivate me, guys, just comment on the comment below. How was this presentation? Did you get the point? That will keep me motivated to what? To create more videos, and please let us share the what? This video as much as possible, so that we can help the community and also help me grow my YouTube video. Okay, thank you so much, guys. Thanks. Have a great evening. Thank you.